Hello everyone. Today we're going to talk about the main events on the schedule for this week. The Reserve Bank of Australia and Reserve Bank of New Zealand meetings, the trade data from the US, Japan, and Germany, and the meeting between Trump and Japan's Prime Minister Abe. Then I'll run through today's trading ideas. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus. The data calendar is rather light this week, as is usual in the second week of the month. The focus will be on the two central bank meetings from the Antipodes. Neither is expected to result in a change in rates, so the emphasis will be on the nuance of policy. The Reserve Bank of Australia, the RBA, meets tomorrow and is expected to keep rates steady. In fact, it's expected to keep rates steady for the whole year. Boring! So the market will be looking for any change in tone in the statement. I'd expect to see only a little change in the statement, which might not give too much impetus to trading. But if anything, I think the emphasis will be on the low level of inflation after the drop in December, and also the risk that the strong currency poses to the recovery. That could result in some profit-taking in the Australian dollar, which has been the best performing G10 currency so far this year. Then on Wednesday morning, the RBNZ meets. It's expected to hike rates at some point this year, but the market puts zero probability on it happening this week. I think this time around they're likely to take a more cautious tone too, which could depress the Kiwi a little bit. As for the other data, the US releases its trade data, and Germany and Japan announce their current accounts. Normally, trade figures aren't so important for the FX market, but I expect that as the new U.S. administration focuses more on trade issues, these data will become more important too. Japan and Germany's current account surpluses are forecast to fall. That could reduce the political pressure on them and therefore be negative for the yen and the euro, positive for the dollar. The U of Michigan Consumer Sentiment Index for February is expected to fall a bit. Now, in January, it hit the highest level since early 2004. But apparently, the post-election enthusiasm is starting to wane. The size of the drop will be closely watched and could prove negative for the dollar. Meanwhile, markets will remain riveted on Washington as the policy debate there continues. Rising friction with Iran could push oil prices higher. Well, this Friday's meeting between President Trump and Prime Minister Abe will show us whether Trump's comments on currencies are serious or just a negotiating tactic. I expect the meeting to result in friendly comments between the two men that may take some pressure off the yen and allow dollar-yen to move higher. So, my trading ideas for today are, first off, I think the Australian dollar is likely to weaken, as I said. You might particularly want to look at trading Aussie Kiwi, as the Kiwi, the New Zealand dollar, seems to be a major beneficiary of Aussie weakness nowadays. My second idea, I've noticed that on the Mondays following non-farm payroll Fridays, the dollar often tends to reverse the move that it made on Friday. It seems that on Friday, everyone reacts as quickly as possible to the data. Then over the weekend, they think and read about it some more and decide either it wasn't as good or it wasn't as bad as they initially thought. And then they reverse the trades on Monday. So today, I'd expect the dollar to recover, particularly against the yen, where there was a particularly big move. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.